Welcome to Option Trades Today. I'm Tony the Baptiste, and I have a trade idea for you today, September 19th, 2023. But first, let's take a look at the market. Even the S&P is down 31 handles, NASDAQ down 145, Russell down 9 and change, and the Dow down 258. They are all down around the same percentage. Volatility up by 39 cents. We've got an uptick in volatility over the last couple of days, signaling that maybe this down move has a little bit more weakness left to it. Maybe it could be a little bit more extended. You also have bonds weak at 118.17, and you also have oil high up $1.27 to 91.86. I'm going to avoid oil for the time being and play something that the stock has had a little bit of a down move, NVDA. NVIDIA, which has a correlation of 0.62 to the market, has not been acting like the market. It's actually been a leader to the downside of the market, a leader to the downside of the NASDAQ. Let's look at the NASDAQ over the last couple of days, and let's look at NVIDIA. They're very similar in nature, but the NASDAQ seems like it's holding up a little bit better than NVDA has. NASDAQ has an IV rank of 12. NVDA has an IV rank of 9.5. Stock is down almost $7 today, but you can see over the last couple of days, volatility and IVR is upticking. So I'm going to go into NVIDIA, kind of looking at something that has enough liquidity to it, but sometimes you get filled 2-3 cents around mid-price. I'm going to go omnidirectional here because I am a little bit bearish on the market, but I think NVIDIA's gotten beat up. I think NVIDIA can have a little bit of a bounce back if the market does catch a bid. I'm at a quandary. I'm at a loss. I'm looking for a trade. I've got to go to liquidity. I got to go where the eyes are. 10-cent wide markets on a $430 some odd dollar stock are good, deep markets to me. What am I looking to do? I'm looking to buy one of the 375 puts. I'm in November with 59 days to go. You know we like to go closest to 45 days. October with 31 days is 14 days away. 59 days away. 45 is 14 days away. They're both the same to me. I'm going to default to more time. Gives me more time to be right. I'm going to go less delta sensitive. I'm going to go to November for that reason. I'm going to look to buy around the one standard deviation, that 15, 16, 14, 13 delta option. I'm going to buy the 375s. I like to go as wide as I can and still collect a credit that's acceptable to me. I'm going to go $15 wide. That's the trade I did make, and show you why. I looked at this trade. I got filled at $1.89. I'm working $1.95. So what I did was I just kind of split up my trade a little bit. Obviously, you know I trade more than one contract, so I'm looking to buy one, sell two. I do multiple of those. I got filled on one tranche. I don't need to push this. It's not like the IV rank is extremely high. It's not like the volatility is extremely high. You look at the implied volatility, you're looking at an 18, not that big, to be quite honest with you. But it is what it is in this market. So I'm going an omnidirectional trade. I like the probability of profit. Really showing me a 99% pop. You got to throw that out a little bit. That's the implied volatility and the price of the stock really wreaking havoc on any type of math models you would look at, because we're collecting a net credit here. No risk to the upside on this trade, as you can see from that green line that goes up into perpetuity and then stops at our break even. Our break even is going to be $15 below our short strike, which is 360, which brings us to 345, plus the credit we receive, let's just call it $1.90 or so. So you're looking at around a break even at just over 343. Now let's take a look at something here, because this is kind of interesting. 343 is right about the middle of that fill the gap that maybe some of my chartists might be looking for. Well, that's where our break even is over the next 45 days. I don't look at that stuff. I don't concern myself with that stuff. All I'm looking at is a high probability of profit, relatively high implied volatility, expanding over the last 5 days or so. Gives me a small amount of long deltas, 6. My max profit is obviously whatever I sell it for. $1.95 plus the width of these strikes, right? Remember, if the stock were to close at 360, you could make $1,500 on this trade. Now, what's the probability of even touching 360? It's a little over 20%. Let's call it 25%. So if I'm right, I'm bullish on this stock, omnidirectional to bullish. I want the stock to go higher because I have no risk to the upside, and I'll collect my $1.89 that I received us. Now, there's a couple of things I want to show you here because this trade does take $3,800 in buying power, and maybe that's a little bit too much for most people here. Let me do a couple of things first before I show you how we can change that. I could go, and I do like to go as wide as I can. You can go $20 wide. You could not go $25 wide and collect a credit. You'll notice it's a debit here. So for me, if I'm using these strikes, I could go $20 wide and only collect 75 cents. Now, how would I manage this? Well, you'd probably have to hold this almost to expiration or more before you would be able to collect that 75 cents or dollar that I like to get. Now, if we get an uptick on this $15 wide one and we're able to sell this at $1.90 or so, then you would be able to manage this a lot sooner because you collected a higher credit. You collected $1.95. I like to make $1 for my $3,800 worth of risk. Now, hold on one second. You're in an IRA account, and you're going to be using $30,000 in buying power. How can I simulate this same trade and still be able to make that dollar? Well, let me show you what you can do. You can go right down to buying the 270 put. That's right, the 270 put. I'm just picking it because it's about that $30 plus another $60. You know, you can see what I'm looking at here. I'm looking at the buying power effect. The buying power effect is $3,800. It's basically the same. You can move it a little bit closer if you want to. You can go as far as or down as much as you want for this credit to change. 46 cents versus 38 cents isn't going to make a difference to me. You can go to 285 and use the same amount of buying power. All I'm looking at here is to reduce my buying power. If I was in an IRA type account, when I'm doing a trade in an IRA account that is has naked options, I want to make my buying power as similar as possible to the buying power I would use in a margin account. That's how I maximize my return in my IRA account. All right, everybody, thank you so much for listening to me. Please do me a favor, crush the like button on here. Follow us on YouTube. I need you to watch us here so that we can keep the lights on. I also need you to do me one last favor, the biggest one of all. Please open, move, transfer your account to Tasty Trade, the #1 brokerage firm in the galaxy, and I think you can get up to $4,000, not $8,000, just $4,000 for moving, transferring, bringing your account to Tasty Trade. Read the fine print. I'd love to have you. And you know what? You can always reach me, Tom, at tastylive.com.